Good day, traders. Welcome to the Phoenix Blues Daily Update, where we bring you updates throughout the day and week about what's moving the markets and how we intend to trade these moves. My name is Jennifer Talia. Today is Thursday, the 28th of September 2017, and I'm going to start by looking at the key data that's come out overnight and any due out later today. Please remember that all times shown will be in BST. Also, if you haven't already done so, go ahead and hit our YouTube subscribe button so you won't miss our regular updates. So yesterday afternoon we saw some dollar strength after the US posted positive core durable goods figures, and that came in at 1.7% versus 1.0%, so obviously better than expected. And although the home sales came in negatively, that came in at minus 2.6% versus minus 0.5%. This didn't really impact the greenbacks move up, which you'll see when we have a look at the charts. We also then had the crude oil inventories yesterday afternoon, and this showed that stockpiles decreased more than expected, coming in at minus 1.8 million barrels versus the 2.9 million barrels expected. Now, if you trade this commodity, this is something you should be taking note of, as well as any meetings and decisions made by the OPEC member states. And later yesterday afternoon, we then had Bank of Canada Governor Paulos give a speech, and he said that the Bank of Canada wouldn't be mechanical in raising rates, rather they would want to proceed cautiously, and any decision they did make will be data dependent. I mean, where have we heard that before? The Feds did exactly the same thing and had the same rhetoric with regards to raising the US rates. And where are we now? Anyway, as you'll see when we have a look at the charts, there was a big sell-off in CAD, and this actually did benefit the dollar, the US dollar, which had already received a boost from the positive data that had come out a couple of hours earlier. And then late yesterday night, the last high impact data news that we had was with regards to the Royal Bank of New Zealand. They opted to keep their rate at 1.75. This was expected. They then went on to say in their monetary policy that they would remain accommodative. And reading between the lines, I think that this could mean a rate cut would be on the cards if necessary, to be honest. Shortly this morning, we'll have Bank of Japan's Kuroda speaking, and it could be interesting. This could impact the yen pairs. And in a few hours, we also have the Bank of England's Mark Carney at 9:15 BST. So if you either trade sterling, yen, if you're thinking about taking a trade or currently in a trade, make sure that you're happy with your risk. Always take profit if you can, or better still, wait for the news to settle before entering any new trades. Then we don't actually have any high impact news until lunchtime UK time, where we have the USD GDP and unemployment claims. And these could both be key movers in the market. So it will be interesting to see whether we see continued move up with the dollar, or whether we see a halt in its move. Also, although not shown in the previous economic data slide I have, last night we also had President Trump, give a speech around 8 p.m. BST, and this was about his tax reform program, and where I believe he was laying out the framework. Now, this will no doubt give some added wings to the dollar index, at least for the moment. So we'll have to see, unless he decides to disappoint again. Also of note today is that the UK's Prime Minister Theresa May is due to speak at the Bank of England conference at some point today about free markets and fiscal prudence. So again, if you are trading sterling, please be aware that this could affect your trade. Okay, let's look at the charts. So starting with dollar index, this is the weekly chart we're looking at. price is currently floating at 93.46. You can see that we've been in a long period of downtrend, but now what we're seeing are indications of a bullish nature. After this big bearish candle down, we've seen a couple of indecision candles, but now we can see that divergence has actually formed on the weekly chart. But also this week, we're seeing that price has has literally broken the highs of the previous 4 candles. We've also had a bullish cut signal for the dollar index pretty much since April this year, but as you can see, that's actually failed to materialize as price continued to push down. Now this would have been due to a combination of the markets being disappointed by Donald Trump and his failure of his cabinet to implement their promises, but also due to the disappointment of the Feds not increasing interest rates, which the markets were expecting. And also together with lukewarm data and inflation. So this week's candle hasn't yet closed, but it is looking, quite bullish in nature. So if it does close similar to where it is now, we'll be looking at correlating with the major mine pairs and looking to trade long. We see the next area of resistance will be the dollar index about the 94 region here. Now moving over to the euro chart, we'll start with the weekly. Price is currently trading at 1.1727. Now this is pretty much the inverse of the dollar index. On the floor this year, the euro index also had a profit in 60. However, again, this hasn't necessarily materialized during these periods. As you can see, price continued to push up with the euro strength, but also the other half of that was the fact that the dollar has been weak, but also euro was strengthened by things such as Macron's win, the healthy look of the eurozone, and all of this despite the ECB and Mr. Draghi periodically slipping in comments to try and stop its move upwards. But now we can see that on this weekly that similar divergence is also forming. These blue lines I've marked here. This week, this last candle here, big bearish candle, although it hasn't closed yet, it won't close till tomorrow, we see that we've had a huge drop-off since the outcome of the elections. And although Angela Merkel did win, the markets, I presume, were disappointed because she didn't win by as much as she expected, and her need to now form a coalition government. And so we saw this huge drop-off, and moving down to the daily chart, you can see this head and shoulder pattern here, and literally the whole of this week, price has actually fallen and is now testing support. Now here at Phoenix Blue, we were able to get into a trade here and have taken profits. Now what we will be doing is watching how price reacts at this level with a look for this zone to break if dollar strength continues, and to take this down to the short side. Now the next chart is Swissy, USD CHF, and you can see the price is currently trading at 0.9750. This is a key zone which I've marked in here, this red zone, and since pretty much the whole of this year, price has been ranging between the 0.9400 and 1.750, and it's found it very difficult to break this red zone here. It's had a couple of attempts, but it hasn't quite gone above. Will this week be the one where that happens this year? That remains to be seen. So we here at Phoenix Blue will be looking for this level to break and to take this to the long side. But any sign of dollar weakness, I will be expecting this to drop back to support. Now moving on to Moving on to the yen chart, USD JPY, price is currently floating at 113.11. You can see this overall pattern here, that price has been consolidating in a tightening triangle, but within that triangle we have this area of support and resistance that price has been ranging between. So we see here ranging before it moves to the upside, drop down, ranging, and will we see similar move to the upside and for this level of resistance to break, coupled with this triangle, the upper trend line? That remains to be seen. However, if we move down to the lower time frames, there may be opportunities to trade from levels such as here, or moving down to the 4-hour, some kind of price action around here to take that long if we get a pullback. Moving over to cable, GBP USD, price is currently trading at 1.3372. Now looking at the weekly chart, we can see that price has been in a rising wave up until about 2 weeks ago, where it topped out, closed above this level, however failed to actually stay above, and we saw it following with the bearish candle, and now this week we see that price has dropped back below the 1.3400 level. Now it's still unclear, not 100% clear, which side has actually prevailed. However, at this present moment in time, with price still below 13400, it seems like the sellers may be in control, and sterling seems to take one hit after the other, what with the negativity from the Brexit EU negotiations, talk of Jeremy Corbyn becoming PM, and a mixture of both good and poor economic data. However, sterling always seems to rebound. Now, whether price will actually stay below the 13400 area, and push down to the short side remains to be seen. But sterling is also another currency that has a hot short signal, which you can see from this blue area here that I've got marked on my chart. So if we do see continued dollar strength, it's possible we may see this push further down to the short side. Now, how far this will go, we don't know. Will it be this level here, or will we see it push down further to the bottom trend line? We at Phoenix are currently in a short trade, and with our stops at break even, so we'll be watching how this progresses closely. Bearing in mind that Carney will be speaking in 2 hours' time, so beware of entering any trades in and around that time. Now, moving over to the Australian dollar chart, price is currently trading at 0.7820. Now, again, the Australian dollar is a currency with a short extreme, and it's had this since mid-July, with commercials increasing their short contracts. But as we'll see, this blue dotted line, price is pretty much stayed within this range, and bounced up and down with this short signal. But this is predominantly because the American dollar has been so weak. So therefore we didn't see the strong move that we were expecting. Now, looking at the weekly, we see that price pushed up, and we're now seeing a third week of bearishness. Now, similar to some of the other charts I've just mentioned, we're also seeing divergence having formed, so at resistance. So will we see this level break support? 07800. That's what we'll be looking for, and once price does that, we'll be looking to trade short, take price down to next level of support area. Moving over to the Kiwi NZD USD, price is currently trading at 0.7190. Post elections over the weekend, we had Winston Peters win. However, he has a need to create a coalition government and has decided to delay making that decision until after the 7th of October, when the final tally is taken from the elections. Now, we've seen that Kiwi drop this week because basically the markets don't like indecision. Now, price is currently testing this area of support. It has broken through the 0.7200 area, only just. So we'll be watching closely to see what happens with the price towards the close of this week. Will it break further to the downside, or will we see a small retracement? And the next area of support we see would be down to this area here, down to the 6800. But we have a bearish bias here next week or week. Now, moving over to dollar CAD, we can see that the CAD has actually been one of the biggest winners against the American dollar, having been since about April. And however, price has stalled and seems like it's making an about turn. Again, similar with some of the other charts I've mentioned, we're seeing divergence forming. Not forming, divergence has formed, and what we've had is this would be the third bullish week. Price has actually broken above the level that we were watching here at 1.2400. So here at Phoenix Blue, we will be looking at any sort of pullback, either on the daily or lower time frames, to take this along up to the next level of resistance. And now the last chart I want to look at is gold. This is the weekly chart. Now we can see that the past few weeks have painted quite a bearish picture. Price has actually broken the 1,300 level, and looking down to the daily, and with worries over North Korea, gold being a safe haven, this would have helped push this up a little bit. However, the markets don't seem to be as worried about the North Korea threats, at least for the moment, as much as they were when they launched their initial missile. So with the dollar index strengthening, we've seen gold push below this level and to the downside. So if price stays below, we'll be looking for shorting opportunities. Now, as you've seen from what I've been talking about, almost all the dollar-based indexes are either at key levels of support resistance or have broken them already, such as CAD and ABLE. So for the other ones which are currently testing resistance or support, which way that goes remains to be seen. However, if dollar strength continues, which it seems like it will, at least for the short term anyway, we may see these levels break. So be prepared and be ready to trade once the opportunity presents itself. Okay, that's it today, guys. Thank you for tuning in, and always, if you have any questions about anything you've heard today, or want to know more about the way you trade, or just want to touch base and let us know how your trading is getting on, do drop us an email info@phoenixblue.co.uk. Also, don't forget to subscribe to our Telegram channel, as we often post some of the trades that we take throughout the day. So until next time, have a great day and trade safe. Bye.